Good morning and welcome to today's morning report with me, Rich Perry, market analyst at Handtech Markets on Thursday the 19th of March. Now these European markets are fairly settled actually, and that is marginally surprising, you argue, coming on the back of such enormous volatility that we've seen on the FOMC meeting that we had last night. What happened was the FOMC removed the word patient from the statement, which arguably is seen as a sort of a move towards rate tightening. However, they then, or certainly Yellen then subsequently provided a fairly dovish outlook on the economy, cutting interest rate expectations, cutting inflation expectations, cutting growth expectations, and also the dot plot, which was dragged lower, certainly suggesting that interest rates expectations for the end of this year were significantly lower than what they were at the last time they did the dot plots. So the market took this as a very dovish move, and there was significant moves against the dollar. The sharp dollar rally that we've seen in the last few months started to retrace. There was significant volatility. Euro dollar, for example, up around 400 ticks at the high. Cable rallied intraday 500 ticks. So it's incredible move there we saw on these forex markets. But the move is being retraced, because basically the feeling is, I think that this long dollar story, or the strong dollar story, is still going to be intact. There's nothing really massively changed, just maybe the timing element of it. But still, the Fed is sort of moving along the lines towards a rate tightening cycle. However, it's just been pushed back a little bit. Took the opportunity for about 12 hours, if that, of movement against the dollar, but we're now seeing a sharp retracement of that move, and the dollar is regaining the strength again. Euro, for example, 200 ticks off again today. Retracing that move. Cable is 140 pips as I speak, and also pretty much across the board on all these dollar trades there's sharp volatility that we are seeing. Now the interesting thing is that gold is not really retracing, but certainly we are seeing some strong dollar moves on this on the indicators. And let me just find, is it that? No, sorry, I've just lost my dollar chart. There we go. First of all, that is the dollar index move in the last day or so. Such an incredible amount of volatility, first down and then up. It just looks as though we're pretty much back to where we were before when we started. So it's just incredible volatility, and these markets are trying to sort it all out. Huge decline also on the VIX index, and that allowed the S&P 500 certainly to increase in value, 1.2% up on the S&P 500. So Wall Street certainly liked that Fed meeting. And the lower VIX should subsequently be supportive of equities going forward. So that's interesting there. But so just incredible volatility in the markets. And how are we going to play today? Well, it's a difficult one, obviously, because the volatility in the markets is still present, but we've got a significant number of economic announcements today. We're starting off with the weekly jobless claims, and that comes out at 12:30 actually UK time, and that's expected to be 292,000, so basically around where we had last week's. And you can see in these weekly jobless numbers that, having been on a fairly improving trend, they've sort of become far more erratic and a bit choppy, and sort of more sideways moving. So it seems as though that the labour market is sort of fairly much settling down now, after having improved throughout 2014. And then into the afternoon, we've got the Philly Fed manufacturing index, which is obviously a regional index, and it just looks at manufacturing and sentiment, and it's expected to slightly improve from 5.2 to 7.1, but not too significantly there. So not a huge amount. And to be honest, the markets will be focusing away from the data anyway. They'll be looking at or trying to settle down this huge volatility that we've got. And that takes me to my chart of the day, which is the Kiwi dollar. Just to give you a gauge of how the dollar is performing across the majors. And if you look at this Kiwi dollar, not a lot has changed on this chart really. You're still trading under this 76 big figure level, which is the big resistance overhead. Didn't make it up towards there, and has actually turned back, and it's actually now broken back below in the last few minutes, really, broken back below the key pivot level, which comes in at 74.40, which had been the resistance, became support. Again resistance, so we break back above that yesterday, but now we're back below it. This is on the hourly chart, and if I can zoom out, you can see that resistance, that sort of pivot level there had been supportive, became resistance, back above it. Now it's interesting because it did initially sort of look to form support on the rebound, but then just subsequently broke down, and that is the move that we've seen in the European session. So that move, that 74.40, I think remains a pivot level that we need to be watching out for. And near term, obviously we've actually had a bit of support coming in the last few minutes as the dollar as the Kiwi has turned around from 73.84, but certainly that key low comes in at 72.74, 73, let's say 72.75 area. So it seems to be that we're still trying to settle down on the Kiwi. Markets are all over the place generally. Kiwi's sort of, in terms of near-term momentum, sort of again negative, as with this corrective phase, but obviously if it can hold on to this support at 73.84, then we can begin to possibly start to think about looking towards that 74.40 level as that key pivot level again. But just looking on this daily chart, you'd say that there is still a strong dollar element to this chart. Not a great deal has changed by the move that we've seen. He's still trading around, or found resistance around those moving averages and fell away. The momentum indicators didn't really do anything really, so you're still trading underneath. The RSI still fell over around that mid-50s level. MACD line's still under neutral, so there's not really a great deal that's happened in terms of positivity, and you just still say that this is just part of this whole dollar big bull run, and maybe is another good chance to sell on this Kiwi dollar. Now the big turnaround in sentiment would come on a move above that 76 big figure mark, because that would obviously then complete a double bottom, but at the moment certainly the outlook remains negative, and I'd be using any sort of rallies as a chance to sell. Anyway, I wish you good luck in your Kiwi trading today, and I will speak to you later. Thank you.